Let me ask you something. When was the last time you used cash to pay for something? In Sweden, only 9% of people have used cash for a recent purchase. Compare that to the US, where over half of all transactions still involve physical money. Talking about India, it is a market in flux. While rural India continues to rely heavily on cash, urban centers are quickly adopting digital payment systems. That contrast gives us a glimpse into where the world is headed and how uneven the pace of change really is. Sweden is leading the charge toward a fully cashless society. Many of its stores don't even accept cash anymore. Public buses, churches, and street vendors have all gone digital. Banks are pulling out ATMs, and the government is piloting its own digital currency, the e-krona. But Sweden isn't alone. In China, more than 90% of urban transactions happen through mobile wallets like Alipay and WeChat Pay. Even street food vendors in China rely on QR codes. Finland has one of the highest contactless payment rates in the world. It's not unusual for young Finns to go years without handling cash. Even buskers take digital tips. We are watching a quiet revolution unfold. One that's changing how we pay, save, and interact with money. But this revolution isn't evenly distributed. In Japan, for instance, cash is still king. Despite being a high-tech society, over 70% of payments are still made in physical currency in Japan. For many, cash carries a sense of reliability and honor. Similarly, Germany has a strong hold for physical money. Germans value privacy and many prefer cash because it leaves no digital trace. Then there is India, a country in the midst of major financial transformation. The government-backed Unified Payments Interface or UPI has helped millions transition to mobile transactions. But still, about half of all payments, especially in rural areas, remain cash-based in India, which I mentioned earlier. So why the rush toward cashless economies? Well, digital payments are fast, convenient, and borderless. They reduce costs for businesses and open doors for people who have traditionally been excluded from the banking system. By 2026, digital-only banks are expected to serve over 2 billion people worldwide. In places where access to traditional banks was limited, mobile apps have created new financial frontiers. But there is more to this story. Digital currencies, especially cryptocurrencies, are another piece of the puzzle. Take El Salvador. In 2021, it became the first country to make Bitcoin legal tender. The government launched a national crypto wallet and invested public funds into BTC. While it has sparked global debate, many locals still have concerns about price, volatility, and technical barriers. Now, look at Nigeria, the country with the highest crypto adoption rate in the world. Yes, despite government crackdowns, nearly 35% of Nigerians use crypto. High inflation and unstable banks have driven people to use digital assets like bitcoins and stable coins to store and transfer value. Argentina is another example with triple-digit inflation, Many Argentinians now use stable coins pegged to the US dollars. Crypto isn't just a trend, It's a survival strategy, according to me. But as decentralized currencies grow, governments are racing to restart and regain control by way of central bank digital currencies or CBDCs. Unlike Bitcoin, CBDCs are state backed. Yes, fully regulated and designed to work within traditional banking systems. Governments own digital currencies. China has already launched its digital yuan, which has been tested in hundreds of millions of wallets. Brazil is rolling out Drex, a blockchain-based CBDC aimed at boosting financial inclusion. The European Union is developing the digital euro, expected by 2027. These initiatives, aim to modernize money without ceding power to private tech giants or decentralized systems. Meanwhile, Fintech is reshaping the banking landscape. In the UK, digital-first banks like Monzo and Revolut are making traditional banks literally obsolete. They offer everything from budgeting tools to international transfers, all in one app. In Singapore, cross-border payments now happen in real time, and India's UPI system continues to evolve, enabling peer-to-peer transfers, merchant payments, and even loans through a smartphone. But this new world is not without risks. Yes, not without risks. Cybercrime is on the rise. Digital payment fraud is expected to cost businesses nearly $50 billion globally this year alone. Phishing attacks, identity thefts, and data breaches are becoming more sophisticated every day. A single weak password can empty your account in seconds. Then there is the issue of accessibility. Millions of people, especially in rural or developing regions, still depend on cash. They may not have smartphones or reliable internet. A cashless system could leave them behind, excluding them from essential services. Yes. Privacy is another concern. CBDCs offer efficiency, but they also raise the possibility of government surveillance. In theory, authorities could track, freeze, or even limit your spending. Yes, through CBDC's mechanism. Imagine a world where your money isn't just digital, it's programmable. Yes. And the future, it's getting even wilder. Yes. Biometric payments are already in play. Imagine paying with your fingerprint or the palm of your hand. Amazon is testing palm scan payments, and banks are exploring face recognition for purchases. Yes, completely new world. Then there is quantum computing. Today's encryption protects trillions of dollars in online transactions, but quantum computers could break those defenses in seconds. That means governments and financial institutions are in a race to build quantum-resistant systems before the threat becomes real. Yeah. Some visionaries are even pushing for a global digital currency. Yeah. It's decentralized, government-free stablecoin that could operate across borders, bypassing central banks altogether. Yes, that's the future. So are we ready for a world without cash? Are we? The transition is happening fast, no doubt. But it is not just about convenience. It's about power, privacy, and inclusion. The choices we make now will shape who gets access to money, who controls it, and what it means to participate in the global economy. Remember that. The future of money isn't just digital. It's dynamic, disruptive, and deeply human. And it's already here. Yes. I don't see there is any going back. Yes.